the Aussie dived across the board after the Reserve Bank of Australia unexpectedly cut rates by 25 base points to 3.25% today on international developments and a weaker growth outlook for 2013. Markets expected the central bank to stand pat. Interest rates are now back to the lowest level since 2009. In the accompanying statement, Reserve Bank Governor Stephens noted that the global economy softened with risks on the downside. As a result, key commodity prices remain significantly lower than earlier in the year, and terms of trade dropped by over 10% since last year's peak. Indicators suggest Australian growth would be close to trend with large increases in capital spending in the resources sector. But the peak is likely to occur next year, and may be at a lower level than expected. The labour market has generally softened in recent months and inflation is expected to be consistent with target over the next 1 to 2 years. Technically, Aussie dollar US dollar dipped through the 1.0328 minor support today, and the current fall from 1.0624 is extending to a 1.0165 support level. Though, we'll continue to stay neutral in the pair as a breakout from the range of 1.0165 to 1.0624 is needed to clear the mixed near-term outlook. Though Euro-Aussie dollar looks like resuming the recent rally after today's jump. September's high of 1.2552 is likely to be taken out soon. At a speech at the Economic Club of Indiana, Chairman Ben Bernanke affirmed that the aggressive stimulus would be sustained even after the U.S. economy strengthened. He stated that the central bank expects that a highly accommodative stance of monetary policy will remain appropriate for a considerable time after the economy strengthens. He noted that the Fed has been following low interest rate policies for about 5 years and that has not led to increased inflation, and public's expectations of inflation over the long run remains quite stable. He emphasized that the responsibility for fiscal policy lies squarely with the administration and Congress, and using monetary policy to try to influence the political debate on the budget would be highly inappropriate. He also urged fiscal policymakers to put the federal budget on a sustainable path, but not so abruptly as to endanger the economic recovery in the near term, as they will soon have to address the fiscal cliff. In Europe, European Central Bank Executive Board member Asmussen said that it remains to be seen whether the banking supervision structure can start as planned on January 1 of 2013. Meanwhile, Asmussen also emphasized to all those who are angling for a possible direct bank recapitalization via the ESM and are prepared to go with a half-baked solution for the banking supervision, not with us. We won't sacrifice the ECB's reputation for this. Meanwhile, he expects a stronger cohesion among the Euro countries, in particular will have a positive impact beyond the Eurozone. On the data front, UK PMI construction and Eurozone PPI will be the main feature today.